Hi, I'm Amanda Beeslaar, Head of Retirement Products for Aon New Zealand, and today joining me
is Alister van der Maas, the Managing Director of Russell Investments in New Zealand.
Alister, today we're going to talk about what type of investor you are. In previous videos, we've spoken about a person taking risk and understanding what type of risk they have to take and that's the way they're going to invest. So how would you go about understanding your risk?
Okay, so the important thing today is to understand about trying to learn what sort of investor you are. So one of the useful ways of doing this is to use one of the tools that Aon has on their website or sorted.org has on their website too. But basically what you're trying to determine through going through a series of questions is how much risk you personally will be able to take. These questions include things like your age, the time to retirement, and some of the risk tolerances. So what we thought we'd do today is maybe talk through those questions and work through them as like a little bit of a plan for people.
Great. So when you say these questions, most people think, oh, I don't want to do a survey. How many questions are there?
Look, there's only 4 questions. It doesn't take that long. And the idea is for it to give you an overview or an outline of what you as an investor are like.
Great, so let's go through the question. First question, when do you plan to draw on your KiwiSaver money?
Okay, look, ultimately KiwiSaver is designed as a long-term retirement savings plan, and it's there to provide you with more income in your retirement, a nest egg. Who knows what the future is going to bring, but it's always good to plan for uncertainty. Essentially what the questioner is trying to do is trying to work out whether you want to access your money in the short term, the medium term, or the long term. Maybe you're close to retirement, you're thinking about using your KiwiSaver money to buy your first home, so you're wanting to get your money out soon. Or you could be young and know that retirement is still a long way off, so you know your money's going to be invested for a much longer time period. You make your selection that suits your requirements. Ultimately, if you're thinking about these things without a financial advisor, I think it's worth writing down a plan, putting the numbers on paper, setting yourself up with a plan like you would a household budget, use a tool to work out what you need and when you might need it. This will help you understand your preferences much better.
So let's cover the second question. What's your risk tolerance?
Okay. Look, it's useful to think about this by thinking about what you'd do if your retirements fell. What would you do if they fell by 20%? Would you take your money out, transfer your money into a different scheme? Would you switch your investment options? Or would you try and take advantage of some of the volatility or the downturn to invest more in the market? These sort of thoughts can help you understand what your tolerance for risk is. But as we've said in our previous video, it's really hard to define it for everybody. So trying to understand what's specific to you and your specific tolerance is really useful. I'll revert to my earlier comments, the ones I just made. KiwiSaver is a long-term retirement savings vehicle. So if you're viewing your investments as a nest egg, then you should potentially have a higher tolerance for risk than someone, an older person who might be closer to retirement, or someone who is looking to withdraw their investments to buy a first home.
So for me, the third question is very relevant because a lot of times people think, oh, what type of investment experience do I have? And when you ask that question, people go, I don't have a lot of investment experience. So take us through that third question, please, Alister.
So you sort of want to understand whether you're experienced and you're familiar with how share markets work, what an equity, what a bond is, what cash might be, and how they could work in your portfolio. If you understand those sort of things, you'd probably be a relatively experienced investor. Ask yourself, is KiwiSaver your own investment? Do you have stocks, shares, bonds that you invest and run as another portfolio? If you don't, that's fine, because KiwiSaver is designed to work for all investors.
I love this fourth question. I think a lot of people go, if I had to get $100,000, what would I do with it?
Well, imagine that you couldn't just go out and spend it and you had to invest it, right? You can't buy a new home. You can't go on a nice holiday, not that we can in these times of COVID anyway. You can't buy a car. You've got to invest it. What would you do? Would you put it in the share market? Would you put a lot of it in the share market and some of it a little bit elsewhere, like in cash or a term deposit? Would you pay off your mortgage? Answering some of these questions can help you understand risk and what level of risk you're willing to take with your KiwiSaver money.
So Alister, now that we know about risk and we know about what type of risk somebody is prepared to take, how do you make the decision, or how do you know what type of fund is suitable for you?
Yeah, so there's a wide variety of funds that are available. Aon offers the Aon Russell funds. We have everything from a cash fund and a conservative fund through to growth and aggressive funds. The main difference between them has been the purpose of this conversation today is the level of risk within each fund. A cash fund is like cash, very, very low returns. It will protect the balance of your KiwiSaver fund, but the returns will be fairly low. A conservative fund takes on a little bit more risk. It has a combination of cash and fixed interest as the dominant asset classes, and a little bit of equities to give it some extra return. At the other end of the spectrum, we have growth and aggressive funds, which are much more risky. The returns will fluctuate from year to year, but they give you a good opportunity to grow your KiwiSaver funds over the long time period. Additionally, we have a range of what we call target date funds. These funds, the asset allocation within them or the risk within them will vary depending on how close you are to retirement. They will move from a growth fund through to a conservative fund the closer you get to retirement. These are a very good option for those investors that don't really want to do anything, that just want to make an investment and not look at it. Personally, I have my money invested in a target date fund that is the date of which is timed to be as close as I could get to my retirement, and I actually don't have to look at it. Aon Russell take care of everything for me. I just make the contributions and my asset allocation changes through time. So there is a lot of different funds out there that you can choose from, and it's really useful to go through the questionnaire so that you can work out which is the right fund for you.
So what you're saying is the questionnaire actually takes you through the type of risk that you're going to take, you're prepared to take,
Yep.
and at the end you get a score, and that score relates to a specific fund, and then that's the type of fund that you can invest into.
That's right. It doesn't stop you investing in any fund, but it certainly gives you a good understanding and a good idea of which fund, based on your criteria, is suitable for you.
Great.